Welcome. My name is Thomas, back here with another video. In this video, we talk about the Schedule C, profit and loss from business. This is the form that self-employed individuals normally fill out for themselves. And when it comes to being self-employed, you want to be an LLC as a single member who has to fill out a Schedule C as a result of being self-employed because you have limited liability protection as an LLC versus a sole proprietorship where you have no protection. So if you ever got the lawsuit, all your funds and assets can be seized to pay the debt. As an LLC, if you got your structure right and you can prove and show that you have a business account and all the things you do concerning your business is flowing through a business account, then it's separate from you. And that's the benefits of having an LLC as a self-employed individual versus a sole proprietor, which is a person who hasn't registered business with the state. And so you want to have that protection. Regardless if you're brand new, you're just getting started, you want to have that protection. Now, say from a funding perspective, you don't have the money to register with the state right now, but you want to get started, you want to start making some money, and you definitely want to double back around and become an LLC as soon as possible because you want that limited liability protection for the business that separates you from the business. That way, in any lawsuit type of deal or any type of legal ramifications, the business is protected because it's a separate entity from you. And so that's powerful. You want to have that going on for yourself. So when it comes to having the Schedule C, it goes on your 1040 tax return. And that's why it says Schedule C, Form 1040, because it's for individuals who file an individual tax return. Schedule C is one of those things that go on your individual tax return. So we deal with the name of the proprietor. So in this case, it'll be you, your name here, your social security number go here, principal of business or profession, including product or service. You'll put that on this line. You'll put your business code here, the business name go right here if you have one. The employer identification number go right here in this box. Business address right here. Accounting method. Uh, most people will be cash. Some might have the option to be accrual. I've always chosen accrual method because I've understood the accounting methods, and I chose the one that best suited me, in my opinion. And so it was always accrual for me. Did you materially participate in the operation of the business as a self-employed individual? Is definitely going to be yes. Um, if you started or acquired the business during 2023, in most cases that's not doesn't apply to us. Uh, did you make any payments in 23 that would require you to file Form 299? And only those are only if you've done business with other businesses. So business to business would generally uh, receive a 1099 for whatever services that they perform for you that you get to give to them as a receipt for the work they've done and a receipt to you to show that's the expense you had for the business and that's a write-off for you. And so that's what that's talking about. Income, part one. Gross receipts or sales, go on line one. Two, returns on allowance. This only deals with people that's dealing with inventory for the most part. Uh, Cost of goods sold, like I said, if you're dealing with inventory, if you're dealing with manufacturing and making a product or things of that nature, you're dealing with raw materials that'll go there, that'll deal with that. Gross profit is after putting your number on one and after subtracting two if it applies, and then having that number on three, and then cost of goods if it applies. And if it don't, then number one will just carry down to seven for the most part for a lot of self-employed individuals. And then we got expenses, advertisement, car and truck expense. So you look at this here and you see what business expenses relate to what you do. And if you don't see any specific categories for what you do, then we use 27A other expenses and we put those there. And so that's how that works And then we scroll down. Like I say, if cost of goods apply to you, this section will be filled out. If it don't, it won't. If you have a vehicle inside your business, this section will be filled out. And like I said, other expenses will go here as it relates to business expenses that's not covered in part two of the general expense section. So that's how that'll go for self-employed individuals. So when it comes to learning basic income tax preparations, knowledge, and skills, uh, I run across a lot of people who want to learn how to master self-employment, but you can't master self-employment without learning all of it. It's the knowledge and skills that you have to learn is all inclusive to uh, learning so many different parts of what you're doing that's going to include uh, the 1040. It's going to include the Schedule C. It's going to include the Schedule SC, self-employment tax, if you had a profit. It's going to include other different forms of schedules based on the overall situation of the client that you're working with. And so when it comes to specializing in self-employment, there's no such thing. You know what I'm saying? You might make it a concentration, but it's nothing that you're going to specialize in when it comes to self-employment unless you're going to pick a niche as it relates to somebody who may be self-employed, like Uber and Lyft drivers. If you specialize in working with those individuals, that's the closest you're going to get to specializing in self-employed income. And so you pick a niche or industry you want to target. You craft a marketing message and a package together, offering to the client to let them know these are the things you do and the things you get as a result of being a client. And you get to charge a higher price point because you specialize in a specific area. And that's powerful. So when it comes to being a self-employed individual, profit and loss statement, you want to definitely be a LLC because you want to separate yourself from the business in lieu of any legal ramifications that may take place as a result of doing business. You don't want to have all your assets all caught up in the rapture of that lawsuit or litigation. And so the only way to successfully do that is to become an LLC because it's a separate entity from you. It gives you limit liability protection and having a business account from day one where all your money is going through that business account and not a personal account because commingling funds is how you lose your corporate veil, so to speak, of limited liability protection because now you've just shown these people that the funds that you're making for this business has been going through a business personal account all the time and is not separate from you because your personal account was meant for personal. So you want to have a business account straight out the gate. You want everything for business income to go to that business account. And so when it comes to being a self-employed individual, and you want to be able to maximize your profits, then you want to work with somebody who can help you realize what other deductions you may be able to take if you don't already know those things. I'll see you in my next video.